Hey gang, you guys all hear me and see me okay? All right, awesome. Okay, so today we are continuing our discussion on support and resistance levels. So what we're going to do though is we're going to look at the charts live and identify the major support and resistance levels that are going to be coming up. It is a little bit of a crazy choppy market out there here today. How many of you guys are getting chopped up? We'll see if anyone fesses up. A little bit. We got a lot of people that are just watching. That's awesome. Okay, good. Yeah, so I haven't had a trade yet today either. I missed the stuff right at the open, but you know what? Even in hindsight, going back and looking over that, it was kind of a little bit iffy. So what we're going to do today is we're going to look at, again, the different types of support and resistance, and I'm going to have you guys also help me identify what you think the major support and resistance levels are in the market that we should be looking at right now. So I'm going to come and we're going to start and do a top-down approach. So this is what I always recommend when you're taking a first look at the market when you're coming into the day. Have an idea where things are at on the larger time frame, because if you are completely off on that larger time frame, it can just mess up your day. So we always want to start with a top-down approach, and you don't always need to do like the monthly to begin with because, well, unless you're doing position trading, you don't really need that so much, but it still gives you a good idea of kind of where things are at. And are you looking at a market that is fairly bullish or bearish or just kind of somewhere in between? So we'll go down to our next one here. This is our weekly. And as you can see, I'm going to clear up some of these universal things that I've got going on here. So what we can see is actually really deep V, very, very fast. And when we see this type of action, the first thing we want to look at is that 76.4% as the retracement level. But if it's a super fast V all the way back, it's not unusual to see that push through that. So you can see it happened over here, a little bit on a smaller scale, down and up. Let me change my color here. Not a big fan of the black pen because we can't see very well. So you can see it like one version of it over here, where it was a pretty fast retracement. Whereas over here, when it came back up, this is more of a typical V. It wasn't like extreme momentum either way. So this would have held that 76.4% retracement more easily. So the deeper the V, the easier it is to push a bit further past it. Of course, as we were coming into that 76.4, we needed to see how that momentum was shifting. So those are our first levels to kind of get us an idea of what's going on. And then we want to go down and we'll look at the daily. Again, I'm going to clear these here. So one of the first things that we can do is we can put our Fibonacci retracements on here. And this is going to give us some of those initial support and resistance levels to watch for. Let me add this. So I'm going to switch my template here. There we go. So you can see it a little bit better. I recommend that your 76.4, make that a different color that stands out a little bit better than your other ones. So you can see here on the dotted one, I made it orange and I made it fat. And then my 50% I have is red. So anytime I'm coming up into something that is orange, I know that it's 76.4% retracement of something. And anytime it comes into the red, I know that it's a 50% retracement. And so that just kind of gives me a really good place to put things into perspective when I'm going down to smaller time frames. So what I'll do is I'll make this a universal one, and I'll want to make sure that this is on all charts. So it's going across all of my time frames, intraday and daily. And what you can even do is that the ones that you have on the bigger time frame, like a daily chart here, you can even use a different fib retracement for that. For example, I could make all of these a bar that is similar to the orange one. That way, when I'm looking at the intraday charts, I know, hey, this is a support level that is taking place on a bigger time frame. So that means that on the smaller intraday charts, there might be more wiggle room at it. You know, an entire day's range, it could push up through one of these levels and still be considered to hold it on a daily chart. But intraday, it just tells me, hey, you know what, we're at a zone and it might not be as perfect of an exact spot for resistance, depending upon how the momentum's hitting it. So I might not want to take like a pivot trade exactly at it, but it tells me, hey, it's a good zone to watch for potential for those to happen. So sometimes I'll use the darker fat lines on the bigger time frame levels, and then I'll use the little dots that you normally see on the smaller ones. So that kind of helps that. Now, what else do you guys see for support or resistance here on this daily chart? Is there anything else that you see here that stands out to you? Think back at what those different types of support or resistance are. You've got the channels, you've got gaps. Yeah, we got a filling of the gap here. So there's two ways to measure a gap. So you've got, you guys were chatting about this in the channel a little bit. You got the zone of where it comes to the low. Let me kind of widen this up here. So it can be the low of the day before the gap right here, but it can also be the complete closure of the gap, which is right here. So you can see we are right at that zone. So your gap zone, when that closes, is really important because a lot of people that got flushed out here, they're back to break even now. So when this like has this huge massive gap, then that's a really strong psychological level too. So yes, other types of support that we would be looking for or resistance are, we've got the trend line, where when your channels break like here, that becomes a resistance level. So if you take this straight across right there, that's giving us a pretty strong resistance level. Now, since this trend is gaining in momentum, we can look at the last portion of where that broke down to. And kind of go a little bit tighter as well. And that is right across here. So you're still in that zone, and sometimes it gets better because the more this holds this right here before it breaks, the stronger that zone is. So here, it's actually up at the upper end of the channel before it breaks down and plunges through the lower end of the channel. So it's not as strong as it is if it's hugging that and then breaks down. Then it's an even stronger one. Let me see if I can find you an example. I mean, this is a good, kind of good here. We'll use this one. So you can see that the momentum's shifting here and it's kind of going back and forth here. So this is where it breaks right here. And notice that's exactly where it stalls right there on the way back up. But this still isn't quite hugging the lower end. So let's go take a look and see if we can find something else to show you. Probably go down to like an intraday. Got some more days on here. Just kind of make this a little bit easier for you guys to see. So this is an example, but you'll see it actually blew through this one. Let me show you this here. So see how this is kind of hugging like right along there? Yes, we've got a tail underneath it, which you can see I basically just ignored and kind of held all of these levels here. So straight across, you're looking at right here. So that's actually going to be a very strong resistance level most of the time. Let me put that horizontal line in there, right there. So here you can see it kind of stalled at that level, but it managed to break through it. But more times than not, it's going to stall there. So this has extra strength based upon what we're seeing happening on the larger time frames with kind of the slower pullback and shift here. But normally that's going to hold really well. So when you see things kind of rolling over at highs, that zone from there to there becomes what we call a double tap zone. And that means that it's a level that we can often start to look for shorts to go back to the downside. What is the main thing that happens here that is giving this greater strength? What do you see that is pushing this stronger? I'll give you a hint. It's the lower portion. What's going on down in here? And what would we want to see instead to have that a stronger resistance level? You guys know? Yeah, you've got an inverse head and shoulders down there. It's kind of a double-headed monster. But what would we have wanted to have seen to have been better? Yeah, John, exactly. A V shape. So if this had been more of a V back up there, then that's easier for that resistance level to hold. So the fact that it comes down and creates like this rounding off, that can give it more strength. So that's one of the things that we watch for when we're looking at support and resistance levels is not just what that resistance level is, but how did this trend develop? How did the previous trend develop? So if you look at it over here, we've got a bit more of a V. It comes into about that 76.4%. Here we don't have, that channel there for you, but it's about a 76.4% retracement, which is also where that usually is. So that channel break zone is often corresponding to a 76.4% retracement. And so we get a bigger correction in here. We get a two-wave correction in here. Now, what would have been more ideal for this to have totally turned around at this level? Who can tell me that? Or given a stronger pullback at that level? Some slower upside momentum. Yeah, so if it wasn't quite a V, that would have helped. What else could have helped? Two waves. Yes. So when we are looking at this on the way up, it's just like one steady channel here. We're not really seeing the wave development very well. And a lot of times, even when wave development is kind of messy, like here, you can still see that shift here in the middle. We don't really have that at the middle. There's one up here, but it's not down like in the middle of that channel. So over here, we do have the two wave move up, back up into that zone. Here's the channel break zone kind of here. So you can see that's kind of serving as some resistance there. And then it pulls up with the second wave and we get a little bit of a bigger correction again. Doesn't fully turn it around in this case, but if this was a little slower, it could have. So this had that potential to hold there. So the potential is greater for this type of move to hold than it would be for this type of move. If you have a really clear two waves, much higher chance for that to hold. Now, whether it does often comes down to other things, like what is the momentum on bigger time frames, things like that. I don't recall over here, but a lot of times I will try these as a short, and if they're just not working, then I'll scratch it and then look for the next move. So if it doesn't go on wave 2, then I'll look for wave 3. You guys saw an example of that yesterday. Let's see here. So those are some of the things with regard to support and resistance where it's not as clear cut as, hey, this is resistance. It's how's it hitting that support or resistance? What is it doing compared to the trend placement and the larger momentum? So another thing that would increase this as a resistance level is that if this is a bigger kind of momentum shift, then it's harder for that to then put in new highs. You're more likely that if this has a two-way pullback, tries to come back up, it's not going to be able to make it as far back up. And then resistance levels on the upside, you're more likely to see closer ones hit and hold. So another thing with support and resistance is that the stronger the move is, the more easily it can break. And if something is stronger, still kind of stacked to the upside, then it's easier for it to come back up and retrace those levels. Whereas if this shifts more, it's harder for it to come back up and retrace. So then it will tend to hit closer resistance levels. So let's say that does that. Let's say it has a channel more like this and it's coming down and has a two-wave drop. If we look at this to here, this might only pull up like 38.2% and then go into an avalanche where it might hit 38.2 here, 23.6% here of this Fibonacci retracement. So going from this high to this low, retracing back against it. Whereas when it's stronger, it's easier to retrace more than that 38.2 or 50%. So top down, what do you guys think of this time frame? What's going on here? What other resistance levels do we got? What do you think is going to be next? And by the way, I have absolutely no idea is also a valid answer. Take some guesses though. Possible double tap because it's tilted, measured move up. So those are some things that you can watch for. Measured move up where though? I mean, you've got a low to an absolute high, so you're looking at that. That's one possibility, which would also correspond to this previous high over here. Yes, you've also got the channel here. So this trading channel is offering support and resistance too. What's notable about the trading channel right now, you guys? Yeah, there's a couple of things. First off, currently it's in the upper half. So we will find cases where it can hang around up here and then still break down. In fact, we were looking at one of those examples here a minute ago. So that's a possibility. Ideally, for a stronger breakdown, it would hang down here and break down with like an avalanche. So you'd have stronger momentum here and then an avalanche. So what's interesting here is that it is not breaking at either the third test of support or the third test of resistance. So third resistance, third support. Here's that example of where it was kind of hanging out at the top and then pulled back down. The third test of support or resistance is the one most likely to break. So that has the highest probability of breaking. But we're seeing that right now it's not doing that. So that makes this a much more tricky zone to be trading in. Your risk is going to be higher in this. We call this the what? The zone of pain. Yes, exactly. Here's our guy. Ah, my son liked that one. So, so what happens in the zone of pain, you guys? And what is the zone of pain? Who can explain to our newer folks what the zone of pain is? Market indecision, chop. What's volume usually look like? Yeah, so this is a 240, so it's a little bit skewed as you can see. But as this was forming and trying to do a potential for a momentum reversal here, volume was basically dropping off, which is good. And then it picked up when it tried to come back lower. But now that it is pushing higher, it is very low. Look, this is the lightest volume we've actually seen for quite some time here as far as how this is playing out. So it shows us that people are very indecisive. And what happens in a market like this is that it opens it up and it's easier for flushes to happen. Now, what's also interesting is that it can be gearing up for a bigger move. So it's basically resting and taking a breather. And the zone of pain can be a really good, interesting spot because it can tell us that it is a level that the market is getting ready to make another major move. The thing is, you don't want to get chopped up in the middle of it when it's doing it. So another example is over here. So what we had happening over here is that we had the two waves up. And then trade correction kind of did an inverse head and shoulders, but it's really choppy in here. If you're trying to put in a lot of trades in here, they're all basically scalps. So you can see that same type of thing happening in here. Now, we can get some of these smoother breaks, but you want to watch those smaller time frames and look for things to really start to line up. And this is a spot where if you predominantly trade like the NASDAQ, for example, start taking a look at what's going on the Russell and the Dow and the ES, because they might have patterns forming that are more clear than what you might be seeing on the NASDAQ. And the same thing for trading individual stocks. Look for other stocks that will tend to trade the same. So maybe if you're looking at mining stocks, you know, one mining stock might be a clear-cut pattern than another one. So that can be really helpful to give you an idea of, you know, when is timing really going to have the best chance of giving us a stronger setup so that you're not getting chopped up too much in here. Really try to back up, keep an eye on what's going on those larger time frames, and recognize when you are in a zone like this. So when you have something that here, 1, 2, 3, it's kind of widening up there, and then we get a fourth high up here. See how this is starting to kind of shift where it has the slower upside there? That starts to be an indication that something is getting ready to happen. Now, this could have shifted again here and broke to the upside. It comes down to basically the last shift in that congestion or that whole messy area that can lead to the move that comes out of a zone of pain. And they're usually pretty fast a lot of times. So we can get a pretty good, strong, solid move coming out of them. You just don't want to get chopped up in the middle of them. A lot of times they happen when, for example, you might see something that looks like it could be a momentum reversal. 1, 2, 3. This is perfect zone of pain area, but it doesn't have like everything quite perfect for it. You know, here the V's are really steep here, back up to the high. The distance between the highs isn't the same, but this still could have played out here like this and done a smaller momentum reversal and broke into the downside. So the zone of pain doesn't always break the same way every single time. You might have it hanging out at a high and then it ends up breaking to the downside. Now, when they do break, it's worth watching any smaller continuation for a setup in the direction of that break because it will usually go pretty quickly. So here today, you can see all of this overlap. Now, here's an example again over here, how these break. So this one here, we don't even see a really good shift in momentum there. All we got is that this had an initial pullback, it flushed, and then it popped back up. So when that happens and you see a flush and it comes all the way back up to the upper end of the channel, it's usually going to have a better chance of pulling up too. But you've got to watch things like the time development. Is it good time development for breakout? And it's going to be a higher risk setup unless you can get something smaller and use your advanced trade management. Now over here, you can see there was a little bit of a shift right here. So that kind of helped it, but it still came off the lower end of that range pretty quickly. So a lot of times you'll see these with like a two-wave move down, and that can help give you an indication that it is ended or ending, but it's not always going to be the case. So be really, really cautious with these areas and start to, you know, when you're first starting, you need to first start with a bigger picture outlook and then go down to the smaller time frame and don't get too wrapped up into trying to get chopped up in there. Look for continuations instead and look for something that has a clearer pattern like a phoenix or an avalanche. And with time, you'll get better at trading the zone of pain and recognizing when something is actually ready to break out versus when something is going to be too early. So if in doubt, just stay away. And I saw that that's what a lot of you guys were doing today. So great. Let me show you guys what's happening here on the even smaller time frames right now. So look at this in here. I mean, we can still see things like here's a 2A pullback. You know, it was a megaphone in here. So we can still see these patterns. We can still see the shift in the trend channel. We can still see a 2A move in here, but catching these and having really good return compared to what your risk is where things are tricky. Because if you have something like over here, you've got 2-wave up, 2-wave correction, you've got another 2-wave up, you've got another correction, and then you've got a 2T and a double tap. Well, you can short that and you can adjust your stops pretty quickly. So your absolute risk isn't really that high. If you're shorting like a channel break over here, though, when you finally get confirmation, what are you doing for a stop? Your stop really would have to be up here, because if it's a smaller move, it's easier to get flushed. So here's your original right here. This ends up being about the same size as far as the impulse wave on the downside, but your stop here is about a third, whereas your stop here is 2/3. So huge difference there. And that's why I tend to stay away when the market is doing this, unless I find something like a smaller avalanche where I can keep a tighter stop. And this one would have been a little bit tricky because what we're looking at here, distance between these lows, that's really tight there. This was fast up here. This shifted here. I wouldn't have taken that. So even though we can see, hey, there was a bit of an avalanche pattern here, we've got a rounding off, you know, maybe this is some sort of head and shoulders. I wouldn't have taken this. Yes, that is part of why it got stunted. So they could actually come back in here and then go at that point, and that would kind of give you more of that even spacing between the highs too. So kind of like what Harvey was posting this morning. Let me show you guys what he had. That might need to be like my new zone of pain image there. Power Rangers. Do kids still watch the Power Rangers these days? Anybody? You guys are like, I have no idea. So that's what happened here. You know, it broke and then it came back down into it. It actually came back down in twice. So that's what could happen right now on the market. You can kind of see that flipped over. I had accidentally flipped over Harvey's picture earlier. I don't know how I did it. I clicked a button. Oh, here, it was this one. But I need it to like mirror it, so that still doesn't give me a good view for you guys. The ES is a little better. I've actually been following the ES this morning more than the NQ because it's a little bit less choppy. But here's the tick chart, so you can still see that things overall are pretty choppy on the tick chart. But we do get a little bit more of it clearing up with regard to like the megaphone. Here's the, this is a momentum reversal plus. So it's really steep on the upside. So it puts in that little bit of an extra correction and then flushes out and then is able to turn around. And so this megaphone ends up being a 2-wave correction here to the lower end. So we're still getting those patterns in there, but it's just not really good or clear. So what I would do at this point is just really watch for something where we start to see something clearing up again. So at this point, you know, this might try to do a little bit of a phoenix that could fail. Then we would get more of that head and shoulders kind of forming there. But the strength on the 240-minute charts, it kind of makes it iffy. So at this point in the market, I'm just taking a wait and see approach. Like there's nothing out there at the moment that I feel incredibly strongly about. I think that this could do a messy head and shoulders. This could pull back and even bring us in a stronger move here. So this could do a head and shoulders. It could do a momentum reversal. And this could continue to widen up with a bigger megaphone at this point. That would be a perfectly normal way for this to try to play out too. We could even see this trying to do something where it ends up being a tilted continuation and then goes and does a correction so that you got a little bit of a better, steeper 2T. So you see how both of those really wouldn't look odd. So I would actually prefer this one, something that would give me a break and try to continue better than a head and shoulders would, because I don't think that the head was really enough of a flush. It kind of was like, well, maybe I'm a little worried, but it didn't really, like, I don't think it really fleshed a lot of people out too much when it pulled back. So I would like this pattern better. And what am I looking at for resistance levels if that happens? By the way, none of you guys mentioned the 9,400 here. So we actually have a price resistance level too at this point. So what resistance level are we going to watch for? Let's just say that plays out. Let's say this goes with a two-wave correction and puts in another move up. Yeah, we already looked at the prior high. That's going to be 1. It's kind of squish it up enough. Gotta get more data in there. The gap zone fill. So the fill from the gap over here, right there. Let's put that on I'm going to put that on universal, so all charts so we can see those. So here's the gap there. Okay, it is on all charts, I guess. So that upper level there is the other one. Right, a measured move. So we've got a couple of them here. We've got, let me make this a little bit less smushy. So here's the two I would watch. I would watch from this one up first, and then I would go here and up second. And so I would watch those two Fibonacci extensions. So let's actually put those on there. So here would be the 1, and then this would be the tighter one. So those are the 2 levels I would watch for. And ideally the bigger one here would be better. So up into that zone would be the best. And then some sort of reversal pattern taking place right up here. Now, what is the biggest thing that would try to prevent this from doing this, you guys, with regard to time development? What time development do I need to watch here? Yeah, we would want ideally each of these 2 corrections to be about the same amount of time. So like if one of them is 30 minutes, you want the other one to be about 30 minutes too. If it goes out past that and it still hasn't started that next move up, then it's going to be harder for it to take that next move up period. And then that would be more likely to confirm that inverse head or that head and shoulders that we were looking at instead. So that's the main risk in terms of time development. We're really kind of close to that do or die point too. One of the things that makes it a little bit more risky too is this kind of tilted right here. So in a typical continuation where it goes higher, this is going to have more of a V pivot off of that high, and then you'll get that slower congestion on the way down. So that can be a little bit of a con, this kind of tilted shift up here at the high. So very deep in the zone of pain here. So be very, very, very cautious as we head into the afternoon. Look for those bigger channel breaks and confirmation on the bigger channels, because the smaller setups at this point have a greater risk that they can trap you. So keep that in mind. Like right now, we've got a little bit of a phoenix on a 1 minute NQ. Does 1,000 tick, what does 1,000 tick equal in minutes? So it kind of depends. It depends upon what the volume is that day. So right now, 1,000 tick is about, let's see here. Well, we can do this easily by duplicating it. And then putting on a time frame chart here. I usually will just put one on top of the other and then see which one lines up the best. So what you can see here is that our division for our day is about right smack in the middle on the 1,000 tick chart. And on the 2-minute chart, it's over here. So we actually need to go a little bit bigger. So it's going to be close to about a 3-minute. Oh, I see my scaling is over. Haha. Let's put this back over there first. It's pretty close. You can see where this pivot here is. It's about the same right there. So it's about a 3-minute right now. But it's really just subjective, because as the market changes, as volume comes in, there's not going to be the same correlation. So especially like we saw this back in February when we started to get huge surges in volume, you really had to change the tick charts that you were looking at to get that same correlation with time. Here's that little phoenix I was just telling you. So it's trying. Kind of, if I squish it up, you can kind of see the phoenix a little bit better. So this is what I was mentioning a minute ago. But keep in mind, we're currently in a market where things can trap more easily. So there wasn't a smaller time frame setup for this. It just kind of came off the lower end of the range to the upper end to push through. And that is something that's common with a zone of pain too. So we don't always get a smaller time frame setup to break it. It might come from the lower end of the range. Like if this is your range, it can come from that lower end of the range and just go right up through the upper end of the range and break the channel, just like this little Phoenix guy did. And that is, again, one of the risks, because it makes your stops bigger compared to what your return can be. So like if you look for what a measured move is going to be, here and here, you can look at both of those. And what your stop level is going to be, you look at it under that range there, you're only looking at about a 1-to-1. So let's put on those extensions. I'll show you guys. And remember, the 76.4% extension is kind of your best, like, guaranteed one. 100% is going to be when you get the equal momentum. 123 when it is stronger momentum. So here's to the low. So you're right close to the 100% right there. Let's move this. Use this to kind of mark our 100% right there. And then if we use where the momentum picked up for the breakout, it's right here. So we're right at about 76.4%. So that gives us the zone for the target that we usually look for. It would be right in here. Can see it's struggling a little bit, but it still looks like it has a shot at it. But when you're looking at comparing your entries, how are you entering? If something is coming from the lower end of the channel to the upper end of the channel to break, that breakout is technically a trigger, but I don't generally like that type of trigger unless this range is really tight, because my stop's going to be down under that last low. Now, another potential thing to do is to take that very first little pullback into it and use that as your entry. But then you still want to watch that momentum really close, because you don't want that pullback to come back more than about a third of this upside move. So here, this move here, if you're doing a retest type of entry, ideally it's going to stay in that upper third if it comes and does it right away. We will see some that break out like that and then come back, and they can come back a little bit more. They can come back into the middle of the range and work. But if it's something that's right away, like a really fast retest, we want it to hold in that upper third. The bigger retest where you get a continuation later on, then that can pull back further into the range. So like the chart that Harvey posted earlier, then that's fine. But we don't want to see that to do that with like a really rapid start one. So you can see how, returns compared to what you're risking can be really difficult. Now, if we did take a pullback one or a continuation one, then you could use a tighter stop, but you would still have the risk of getting flushed out. So it's kind of a little bit more iffy again. Volume actually dropped pretty good here. This is the close to the lightest volume of the day. The lightest volume of the day was over here with the breakdown. Let's see if I got a chart with volume on it for you. I'll put it on this one. So here's the lightest volume. You can see that right there. Even though it was pulling up here, the volume was really light. So this whole thing here is telling me that we had that avalanche forming because of that light volume. And then over here, you can see that volume again is dropping off, but it's not as good. And in the best phoenixes, this volume drop off is going to be really clear. Similar to what we saw here with the avalanche. Let's see if there's a example I can show you guys in the past. So here you can see volume dropping again with that, but it's not perfect. Here we've got a good volume drop. And then look at this last little portion right there. The volume's the lightest in there. So that's really good. Here again, we got the volume dropping with the pullback, but it's not perfect. We would want to see steady pullback in volume throughout that entire range for your more textbook phoenixes. And again, textbook doesn't come along very often, but that's what you want to see. And it happens after hours too. So you'll see the same thing happening with the after hours with the volume. So again, here, avalanche, lightest volume here, right before it drops. Don't have a lot of clean phoenixes on this 30-second chart, do we? Or avalanches for that matter. So it can be a little tricky after hours because you're also contending with a foreign market opens and closes and news and things like that. So sometimes it's not always perfect, but ideally you would see this volume dropping throughout here. And we don't have that happening this time. So here, lightest volume. This, ideally, what you would expect would be volume decline. It doesn't do it. So the volume isn't really giving you the confirmation for the setup. And it's not really doing it here either. A little bit, but not too much. So it doesn't always happen, but in a textbook one, it will. So textbook will have steady decline throughout, like this does. This is a good one because you can see that that volume is definitely lower, and you have the lightest volume of the entire session here as it's getting ready. So that's kind of your pretty much textbook example there. This is why we don't rely on volume as like 100% guide. It's just another one of those tools. It's not something that we say, oh, volume has to be perfect for us to take this trade. It's just another thing that can be a confirmation tool. It won't always negate a trade though. The one thing that would be the biggest concern is if volume was increasing during congestion, because that would make it more prone to fake breakouts. So here we're right up at that gap closure. It hasn't made it to the 100% on this one. And it's just tapping that zone here on this one. Look how it came up to 100% and then the 76.4 is serving as support. That's really normal. And then here with a 76.4, when you're going from the faster move where it picks up speed, that's serving as resistance. And that's why we usually aim for that 76.4 is kind of like the minimum that you're looking for. All right, you guys. So be careful out there as we head into the rest of the day because things are still looking like we're going to see a lot more chop. So we're going to continue to look at how support and resistance affects the market tomorrow and which levels are going to be more important and the different underlying factors that are going to influence whether a support or resistance level holds. If we look at this this is a 100-tick chart. If we look at this even on that smaller time frame, notice that there was, where's my pen? There we go. More of a steady move here to that low, and it's more of a V. So that V helped the previous high hold better. So it goes back to what we kind of started with when we were first discussing the move off of the high. It didn't have that as much of the rounding off as it was coming into the support here. Now it gets a little bit messy on this side, but this is steady. Same thing over here. It's a steadier move, comes back up, holds that high better. And this is really common. See how this goes? It tests it, and then it does a double test right away. That's actually pretty common. It can be harder to get a full reversal when it happens though. But that's not always the case. So don't make that like a rule. it can just be a little bit more tricky. So here's another example. So it can do a double tap like that and then do a smaller double tap. And sometimes that will go to a slightly higher high too. All right, you guys, so that is it for today. I've got a lot of catching up to do here this week, so I'm going to get going here, and I will see you all back here tomorrow. And I did not get that forward focus done for you guys yesterday. I completely ran out of time and still struggling to catch up here. So I'm going to work on that here for you this afternoon. We've got a couple of webinars coming up that are special events this week too. I'm doing one with Anka Metcalf later this week, so I'll be presenting on Thursday. So today was a good forward focus. Thank you. So we'll be doing that on Thursday. So keep an eye on your email for that class coming up. And then I think we're going to be doing a special one on Saturday this week too, this weekend coming up too. It is going to be my favorite strategy for new traders. So new and struggling traders. So we're actually going to be diving into the Phoenix and the Avalanche in detail on Saturday. So if you're not familiar with that or you want to brush up and see new examples, or trades, keep an eye out for that too. So those are on the roster here as we go through this week. So yeah, very busy week. But yeah, that's it. All right, you guys, I will see you back tomorrow. And here is a chart for Nicole showing you guys time frame versus tick charts. So let me put that up there here. Oi, there you go.